Today's market call is presented by Robinhood. Elevate your trading with Robinhood Legend, the sleek, free, customizable desktop platform built for active traders. While there is no cost to use the Legend platform, there are other fees associated with your brokerage account. See the Robinhood financial fee schedule for more information. It is special, but this Wednesday, November the 5th, is more special, if I can use that term, Dan Nathan, because we have a guest coming in a few minutes. I'll tease that. This is Market Call, 11 a.m. on the East Coast. That's Dan Nathan. I'm Guy Adami. Interesting day, I guess. I thought the day would sort of see some extensions to the downside. We have bounced back, but there's some other things that stick out to me. We will discuss. How are you, Dan?
I'm doing great. So that guest you speak about, head of education at Robinhood, Mike Obucina. We just call him Obi. Mike's been on the show with us before. I actually did his pod on Friday afternoon. We'll get the details where you guys can watch that. I think it's the week that was, and that's on Robinhood's YouTube channel. Guy, you are doing it this Friday.
This Friday, the 7th of November.
Yeah. How about that? So we're going to give you guys a little heads up where you can find that on Friday afternoon. If by the end of the week you just need more Guy Adami, I mean, like,
doubtful.
Why not?
You know, it's funny. You know, Obi, before the show, we were talking, and he said, you were feisty last night on the show. I said, I was myself. It was Dan. You were all kinds of feisty last night.
Well, I mean, part of it has to do with the fact that, yesterday didn't even feel like a bloodletting or anything like that. Day. And it was kind of like a little bit of a wake up. It's like, listen, there's stuff going on here that is divorced of the markets, right? And so when the market's going to do what it's going to do, investor, psychology is going to do what it wants to do. But you have to understand that there is this chasm, would you say, Guy? Chasm between the euphoria and the investor sort of understanding of what's going on, in my opinion. I don't say that. I don't mean to say that in a condescending way. But there's no way, and Palantir just encapsulates. People lead off, well, the stock trades at 200 times earnings. That's a sideshow. When you talk about an earnings multiple off a low base, you know what I mean? Like, earnings multiples change really quickly, right? Mm-hmm. But it's that sales multiple. And there's very few companies that see the sort of sales increases at scale that a company like Nvidia has over the last few years. That was unheard of, right? So the whole thing about a Palantir is that the fact that it's growing fast on a revenue basis off of a low base, great. But the chasm, again, between obviously what the sales are and the stock's price to sales, I just can't impress upon people just how unique that is, Guy. I mean,
I agree with that. And that's something we've tried to point out. And, again, this is at its zenith. This was a company approaching, when it was a $207 stock, it was right on the precipice of being a $500 billion company, sitting on top of, and I'll be generous, maybe $6.5 billion of revenue or so next year. And you can do back of the envelope math, and this is something trading 90 times next year's numbers in terms of revenue, which you may see in terms of much smaller companies when you talk about maybe $1 billion company, and things don't seem to matter all that much. But this is a company that, again, was approaching $500 billion, and that kind of multiple historically makes no sense. And I think Michael Burry, for you big short fames out there, sort of sniffing some of this out as well. And Dr. Karp, obviously the CEO and founder of Palantir, got a little bit, I don't want to say defensive, but he got definitely a little bit agitated when, the thought of short sellers were broached with him, and talking about people betting against his stock. And it's, again, I want to emphasize this. It's not a bet against the company. It's a bet against the stock. And those are two entirely different things, in my opinion.
That is the most important point about all of this. So if a CEO is getting wrapped up in what a bunch of anonymous eggs on Twitter are saying about his stock, if that is making it into his discourse during an earnings call, which is meant to be about the company, not the stock. Like, think about that. If you are a CEO and you have your CFO and your head of investor relations on a call to speak to investors and speak to analysts who cover your stock, right? They're interested in what's going on at the company, right? Which helps them arrive at multiples and a whole host of KPIs and all this sort of stuff that they are measuring the performance of the company, which should kind of flow through to the stock. But those are two very different things, and I think that's what you're trying to get at.
Real quick, if we can throw up you have the Robinhood platform up, throw up a Palantir chart and go off the April low, and you can see where this uptrend line. The first point is going to be obviously the April low that I just said. The second point is going to be probably somewhere around the September low, and we're approaching what will be, in my opinion, the third point on the downside. Now, whether or not we broach it, there you go. I mean, that's the trend line. So whether or not we get through it remains to be seen. I do think that's a good line to look at. I think if we were to violate that line, and I do think we will, I think the 200-day moving average comes into play. And I think that's not unreasonable to think that could happen. And again, not an indictment of the company, more an indictment of the valuation of the stock.
Yeah, no doubt. And we'll be checking on this one a little bit because, a bounce might be due, Guy. You saw the stock was trading a bit lower. I think, it's funny. I got an update on Robinhood on the app. I was at the Ranger game last night. And
good game.
So, oh, geez. That's why it was interesting to look at my Robinhood app because stocks were they trade 24 hours. So at one point I got a notification notification that Palantir was down 5%. I was getting a little excited. It was more exciting than what was going on the ice there. But again, let's see if Palantir can try to rally and fill in a bit of that gap, because to me, maybe the fever's broken a little bit. You and I will talk Nvidia in a few minutes when Obi comes on. But Guy, really quickly, and there's stuff away from tech that we just have to talk about, and we will. Maybe related to the housing market. There's something interesting going on. But look at some of these names that we've talked about, some of the memory, some of the storage names, right, that go into the servers. Look at Micron today, up 8%. Look at SanDisk, is another one, up 8%. Look at Western Digital, up 6.5%. Seagate, up 11%. I mean, there's still a lot of stuff going on here, and that is, doesn't suggest that we are close to a bubble bursting.
No, and those stocks, it's funny. You try to warn people against valuation, against getting involved in these names that don't make sense. And the companies that you just talked about, historically very cyclical, potentially highly commoditized names that are not trading that way at all. I mean, they're trading like, in some cases, biotech stocks. And I think what a lot of people will say in this environment is, you know what, I'm quite aware of what you, Dan, what you Guy are talking about. I understand sort of the insanity of these valuations, but I'm going to play the momentum game. And I think I'm going to be sort of adept enough, and I'm going to be quick enough that if it turns, I'll be able to pull the ripcord. And maybe, you know what, maybe that's the right course of action. Maybe just playing along with the game right now is the right way to be, because people think they can be, again, with all the different platforms, especially obviously the Robinhood platform, adept enough and quick enough to exit if they sense that something has changed. And that if you're talking about a new paradigm, that might be it.
Yeah. And the other thing is, like I just said, I was at the Ranger game last night. I got an alert. You can set downside stops. You know what I mean? Sell stops. You can lock in where you were willing to take a profit to the downside. You can also do it to the upside. Guy, you got to look at these SaaS names again. Like, look at this Adobe. We talked about Salesforce. So you talk about who is basically what companies are in the sights of some of this AI and the agents that are meant to, kind of proliferate, whether it's in customer, whether it's customer resource management, whether it's, Adobe and in the core of what they do for collaboration and design and the like here. I mean, pull up Adobe here. I mean, this thing, it just can't get out of its own way. So it's just highlighting, the haves and the have-nots. These are companies that are not meant to be as cyclical, let's say, as some of the names of component suppliers to servers and the like, as you just mentioned. But look at the Salesforce. I mean,
it's going to look very much the same, and Salesforce, look, I think we did a decent job. We said when it got down to 230, that 230 level that we saw earlier this year, I think I want to say it was April, like everything else, was the same low we made back in June of last year. Stock bounced, stock came back down, and it felt to me like, okay, we've attempted to break through the downside enough. There should be a bounce here. And you saw a little bit of a bounce, but nothing inspiring at all. I mean, this stock, in my opinion, if it's going to really do some work, we should be north of 280 right now, sort of levels we saw back in May, but we're nowhere near that. So your point is well taken. I mean, these stocks cannot get out of their own way, and not even really challenging the moving average here.
Yeah, I just that's a theme. I was on an analyst call yesterday with some of the guys from RBC who I think are great. There was a software analyst, there was a internet analyst, and there was a couple other tech analysts. And one of the things they were asked the question that they what is one of the most controversial things in their space when they hear from investors, and it really is the question mark death of SaaS. And I think there's obviously a lot of narratives you could kind of try to string one along where a lot of AI, when it's infused into their products, will ultimately be something that their customers are going to be very happy to have, except for the fact that right now it's one of those things where it's only disrupting them, right? And they've not been able to tell a story where it's going to be beneficial, and whether some of these companies are using it to lessen their own costs, but they're not been able to kind of pass through that technology in a way that makes it clear that their customers are going to get the benefit of it. What do you want? Here's
I want a really quick pivot, if we could, just to sort of some of these energy names, and specifically the oil service names. So pull up a Halliburton chart, which is again a name that we have talked about. We thought we potentially seeing a bearish to bullish reversal here in the short term, and it may have broken finally a downtrend that's been in place since the spring of 2024. And I do think, want to go a little longer term, you'll see exactly what I'm looking at. And I do think that's happening. We're obviously through the moving averages now, and you can eyeball and see that downtrend has been broken. So I think very quietly, these oil service names specifically, but energy in general, is starting to get off the mat here. I mentioned PSX a couple times over the last couple of weeks. All these names are seemingly getting some love now for the first time in a long time. And I don't know what story that's telling. I think it might be a bit of a rotation here, although obviously you're not necessarily seeing it in some of those bigger names, but I think around the edges you're starting to see it. So I am absolutely, Dan, keeping my eye on the energy sector.
Well, let's pull up the XLE. So that is the large integrateds, right? And so, I know that
about 88. It's not that interesting, but
no.
It feels like it. Either we're making it a tremendous base against the level that we've been trading at seemingly for the last 3.5 years for the next leg higher, or we're going to roll here. I know what I think. I think we're about to sort of make the next leg higher. Other people say, you know what? We've had the benefit of a higher market. These stocks can't get out of their own way. They're about to roll over. Again, that's what makes markets, but I'm bullish this space here for sure.
Yeah. I don't have an opinion, as you would not expect me to. But I think Carter would say XLE is probably a pair of twos. OIH is exactly what you're describing. It really had this one condition that was pretty obvious, bearish. It was a very well-defined downtrend. It started to kind of work off some of that extreme, I don't know what you call weakness in that bearish to bullish. So I see that from a technical perspective. I want to hit this one. This is not a name that's on my radar usually. This is Trex Co.
Yeah.
REX. So they make flooring for decks on the back of your house, maybe the front of your house, depending upon what you do. I don't know. Maybe do you have a deck on the front of your house? I live in an apartment.
You've been to my house. I mean, we have a deck on the back of the house. We changed it. We used Ipe though, in case anybody cares. IPE. It's a Brazilian hardwood. You can't imagine the density of this stuff, but I digress.
Yeah. Well, look at this thing. Make it a 1 year really quickly here. Wow. Zoom that out. So it's down 30-some% here. And, I mean, listen, some of the stuff that they're saying, I guess it probably might not surprise some of the folks who are really focused on this housing market and some of the kind of trends there. And we spent a lot of time talking about the builders and just some of the outlooks we've seen. I mean, this seems in line with some of that commentary guy, but this is a really big move at 52-week lows to have this sort of plunge.
Well, this has been going, to your point. I mean, this has been a slow motion move to the downside that's just been obviously accelerated over the last 24 hours. And it speaks to, I mean, look, people are going to say this is anecdotal, guy, Dan. You're pulling, you're sort of pulling what you want to pull to complete your narrative. But the reality is, this is one of many things that I've been noticing. And you want to pull up, you pick your home builder. I'll throw one out. Pull up a Toll Brothers chart or Pulte Homes chart. All of these stocks have basically just been floundering here. If you look at it, I mean, they've been going sideways. They all bounced into September. They've all been trading sideways to lower ever since. And you look at these names and say, if the unemployment rate is going to start to move higher, which at some point we will get that data. If inflation is still a problem, which, by the way, The ISM services number that came out today suggests that it is. If the Fed really is sort of a coin flip in December, which I don't think it is, but some people think it is, then it's very hard, in my opinion, to be bullish of the home builders here, especially with some of the inventory build that we've seen out there that nobody seemingly wants to talk about.
Wait, so when you say really quickly on the Fed, and I want to get to Home Depot for a second, because I think that's an interesting extension of what we just talked about. When you say you don't think it's a coin flip, right? I mean, right now, the CME Fed Watch tool is suggesting 62.5% chance of a Fed rate cut 25 basis points. Your thought is what?
They're going to cut. I think they want to talk they want to talk a hawkish game, but I think when push comes to shove, there's going to be a cut in December. I would be shocked if there's not. So I don't think it's a complete certainty, but I think it's higher than the 65% that the CME Fed Watch tools suggest. But, it's funny. We just had, if you think about it, we had Stuart Sopp on the podcast a couple weeks ago, and he thought there was a relatively good chance that they'd cut by 50 basis points. And then 2 weeks later, we're having a conversation about whether or not there's going to be a cut in December. So you see how quickly things turn. Now, since we're on it, before we bring in Obi, pull up a TLT chart, and very quietly, you have a sell-off today in the TLT, obviously meaning yields are going higher. I think 413 in the 10-year is probably the highest we've seen in a while. We're going to test that moving average without question, and we'll see if there's going to be a gap fill from the levels that we saw back in September. Again, I want to be crystal clear here. I think the TLT is going lower, which means I think rates are going higher, and I think they're going higher for the wrong reasons. But that's just me, Dan.
Yeah. And I just wanted to just throw in that Home Depot chart, because this stock, it doesn't surprise me that it's down in sympathy with the trucks. That's what I'm assuming that it is. Maybe let's kind of like blow that one up a little bit so we can see a little closer. I mean, but that thing is just broken this range to the downside. It's through that 200-day moving average. Now let's kind of go out a little bit here. I don't know, Guy. I mean, you got this flat 200-day. It can't get out its own way. It's not great. And then let's pull up a Walmart and then a Costco really quickly, because these kind of stuck out to me, Guy, this morning. They were both down about 1%. And, I don't know.
You put that, you want to keep playing that game? Look at Whirlpool. I mean, look at what Whirlpool, WHR, has done over the last 4 years. This was a $250 stock in the spring of 2021. Look at where it is now. And that speaks for itself. This is, in my opinion, as economically sensitive a name as you're going to see. And here we are with that 4-year move against a backdrop of a housing market that everybody until recently has loved, and obviously a broader market that's been extraordinary over that period of time. So again, anecdotal, I know, but this was my point earlier. I can start to show you around the edges a lot of things that are starting to add up. Anyway, that's just me.
But on the flip side of that, Guy, yesterday, it's not all negative here. You said you thought McDonald's is okay here.
Yeah.
You thought that is a bit overdone. Obviously, it's been a bit volatile over the last couple months or so. What did you see in the report, and why do you think the stock is reacting this way?
Well, they didn't listen. It wasn't as. It was I think it was a year and a half or so ago, and I'm trying to remember when the CFO came on and basically said something to the effect that even their customer base was feeling the pinch. I'm paraphrasing, but that scared a lot of people. But since then, I think the company, listen, they're an unbelievable operator. There's still some value there. And it wasn't as dire as I think as some of the bears would have hoped. Now, with that said, in order to really sort of validate this, you got to get a close above sort of 325, which was the prior all-time high, I think, in the spring of this year. So right now, people say this is just a bounce. The stock is still headed lower. I am not one of those people. I think you can still make a decent case for McDonald's here, but I would understand people saying, you know what, this is just a bounce on a report that was not as disappointing as the bears wanted it to be.
All right. Very last thing before Obi. BAC, as long as we're talking about a consumer, right? And so in this instance, we're talking about a consumer that's still spending. Obviously, North American sales were better. We also know that when you see that sort of pinch that you were just talking about on a consumer that, is McDonald's customer, you gotta take notice,
yep.
Right? On the flip side, look at Bank of America. They have an investor day today, Guy, and some of their executives are talking. Stock was down like 3%. This was after it made, I want to say, I'm going back.
19-year high. You got to go back to 2006, I think, to see the last time Bank of America was at these levels. And that's off the top of my head.
Yeah, no, it is. It's right before the financial crisis started. And I guess my question to you is that, we've had a lot of strategists on the Risk Reversal podcast. A lot of them have tried to point to this notion of a market that's broadening out, right? And they'll highlight the fact that we're seeing, financial stocks, in particular, money centers. We're seeing the investment banks now obviously act really well. There's a whole host of reasons why that might be. When you look at a Bank of America and you look at a CEO, Moynihan, who's obviously set a succession plan in place, he's had very little negative things to say over the last 5 years about a consumer, at least from the sort of COVID lows.
Mm-hmm.
What do you do with a stock like this?
Well, first of all, in full disclosure, I thought the stock would be a lot lower by now than it is. Obviously, that was not correct. But I'm also looking at those highs that we just pointed out from 19 years ago. And it's not necessarily a valuation thing. To me, Bank of America, and again, you mentioned Mr. Moynihan, tells a great story, and there's seemingly no environment where he's not optimistic, and I guess good for him. But I think the ground is moving underneath their feet without them realizing it. And by the way, if rates go higher, which I do think is going to happen, that's not going to be good for them either. So there are a number of reasons to be cautious here. And if you want to be outright bearish, that's fine as well against those prior all-time highs from 2006. But if the consumer starts to slow, if the housing market starts to move in the way that I think that it will, if rates go higher in the way that I think that they will, Bank of America is not going to be spared here. So I think if you've enjoyed the move higher, which obviously some people have, you got to move your feet here. You got to do something to sort of pare down some risk.
All right. Let's pare down some risk with our next guest, who's going to help us navigate the Robinhood legend. There he is, the man, the myth, the legend.
Love him.
There he goes, Michael.
Hey guys, how we doing?
What is that hat? Is that like a feather in your cap? It's like a Shakespeare.
The Robinhood hat.
That's the Robinhood feather. I gotta represent the brand, guy.
That's interesting.
I knew what it was. I wanted you to say it.
It would be cool if you guys had like an all black hat with just the feather in that like electric green. Like that's something that, Guy and I would be down with. And we could represent if you just made that hat and sent it to us. That would be amazing.
Swag.
Well, I believe, gentlemen, I'm coming to New York next week. We will see each other in person.
Mm-hmm.
Can't wait.
And so maybe I'll come bearing gifts with some Robinhood swag.
Amazing. Obi, we got a lot of stuff to do today. We know that, futures has been a big push on the Legend platform and the way you built this platform. And I know that you rolled it out a little more than a year ago, maybe a year and a half ago or so. I loved it at the time. You basically said, listen, this is what we got. And this is the roadmap for it. And you really built a platform where there's multiple products that a lot of folks who think that it takes pro tools to trade, you guys were going to build that, and you built it. And so we're going to talk a little bit about futures and what you built. Guy and I wanted to start first with a trade idea that we've been working on. Okay. So for the last 2 weeks, we've gotten earnings from all the mega cap tech stocks, most of which are all customers of Nvidia. Nvidia doesn't report until November 19th. Okay. So we're going to let you drive here for a second. We'll do the fundamentals. We'll do the technicals in a second. You drive the legend here. Show us how we should be thinking about implied volatility in this stock after we've had, let's say, 70% of their customers give their guidance, talk about CapEx, right? We can all impute that all of the CapEx, whether it was bad for Meta stock, that they're going to be spending a lot more, it's all good for Nvidia. So help us think about how the options market is pricing Nvidia after the customer reports, but let's say looking out over the next few weeks into their own report.
Yeah, we've added some new features and functionality to the platform. As you mentioned, we launched Legend a year ago at Hood Summit, and in just a year, we've added a ton of functionality across indicators, new widgets. You mentioned we launched futures last year on mobile, but we announced futures on Legend just a couple months ago at Hood Summit, and that is now live. But some of my favorite tools are where we can start analyzing implied volatility. As an options trader, you got to know what you're doing with implied volatility. This first one is the snapshot widget. Excuse me. If we click on the volatility tab here, we get the 52-week implied volatility range. And for Nvidia, sitting at a 50% implied vol, which gives it an IV rank of 40%. But keep in mind that includes the April sell-off. And so that's going to skew some of your volatility metrics. So just be mindful of that. A 50 implied volatility, 40% IV rank, that's actually probably a little bit, if you take out April, that range is going to collapse somewhat.
But let's Obi, just explain really quickly. And again, you said if you're trading options, you have to understand some of these concepts. And you guys are obviously created, some of these widgets where you can do that. If you said a 40% IV rank, what does that mean, right? Because a lot of stuff is relative when you're trading options to give you a sense of kind of whether an option is cheap in vol terms, expensive in vol terms, and then you can obviously extrapolate that into dollar terms also.
Yeah, so one thing you can do to sort of visualize what that means is you can add a lower chart indicator to your chart for implied volatility. And what you can see is over the last 52 weeks, roughly, you can see what the high end of that implied volatility range is, which for Nvidia is about a 98% vol. And of course, where does that line up? That lines up right up with Liberation Day. Every stock in the market, basically sold off, implied volatility shot through the roof, VIX shot through the roof. And so this is going to give you that high end of the range. The low end of the implied volatility range for the last 52 weeks is a 20 vol, which is, you can kind of sit down there. And so what this gives you perspective on is what is current implied volatility relative to that range. Is it cheap? Is it expensive? And even though it's on the cheaper side of the range right now, the one thing I'd like to point out is that it has been rising. Implied volatility has been rising, not just in Nvidia, but last night on the show, Guy, you talked about VIX sitting at 19. I think Karen said something like it's sort of in a no man's land, which is kind of true, right? In 19 VIX right now, off a little bit with today's rally, sitting at a 17. What I like to say is, even if you don't want to go down the rabbit hole of implied volatility, how can you use this as an investor or trader? A 17 VIX right now, or is roughly a little bit more than 1% daily moves in the index that you would expect. For Nvidia sitting right now at a 50 vol, do the math, divide that by 16, you're looking at what, 4 to 5% daily moves, give or take. And so that helps you if you're trading the stock, where might levels be on an intraday level they're going to sort of hit and retrace. If you're long the stock and you're looking for levels, maybe you want to set a trailing stop order. Using implied volatility can give you a lot of information, but most importantly, if you're going to place an options trade, it helps like, do I want to be a buyer of options? Do I want to be a seller of options? Is volatility expanding, collapsing? And that helps you build your strategy.
Go ahead, Dan.
Well, I was going to say, in the trade idea we're going to talk about incorporates both of those concepts. But Guy, let's look at Nvidia for a second, and let's just kind of, I just mentioned how a lot of their customers just reported. We know that there's some of their competitors, AMD just reported last night, a good quarter, good commentary, that sort of thing. It seems like, there's no shortage of companies talking about how they have competitive products right now with Nvidia. We also know that Nvidia, a lot of their next gen products were not, they did not see their export bans lifted with this China truce. So right now Nvidia is not baking in China sales into their estimates. So just what did you see, over the last 2 weeks, and how do you impute that as it relates to Nvidia? Because we did see that consolidation. We saw the breakout. Now it's just kind of finding its way right here around that $200 level.
So the basically the skeptic in me looks at what's going on over the last couple of weeks, but the last month or so, and say, okay, we're sort of in the final stages. And I don't want to say clutching at straws type of thing, but obviously doing things that historically people have sort of raised an eyebrow around. I mean, we've talked about the circular nature of these deals without question. The vendor financing we've talked about over and over again. It's like that Shakespeare quote, methinks the lady protests, doth think, me the lady protests too much type of thing. And I think in terms of what we're hearing from Jensen, it's the same. He's talking an awful lot over the last couple of weeks, and seemingly market rallying the stock on the same sort of incremental pieces of news, which is great if you're a shareholder, but you have to start to wonder at some point. And one thing that I've said, and I think you agree with this, they are not going to enjoy 75% gross margins in perpetuity. I mean, that's not how this works. And I think there is competition coming. I think things do move a lot quicker in today's world. I think they absolutely have a moat, but I'm not convinced that moat's going to hold for as long as the optimist seems to think. And when those margins go down, the valuation that seems cheap now gets expensive very quickly. And again, we had talked about price to sales in Palantir. You have a very similar thing going on in here. Obviously not to the magnitude of Palantir, but historically, Nvidia just on a price to sales level is very, very expensive.
Yeah, and so I'll let Obi take a look again at the vol once we kind of lay out the trade a little bit. But Obi, I'm kind of in line with Guy here on the fundamentals and the trade set up into their print. I mean, last night on Fast Money, I was like, well, what else are this company going to say, right? Like, well, like we get it. You know what I mean? The CapEx is this. We can kind of get a sense for what this means. All these different contracts that OpenAI is throwing around, and AWS gets from OpenAI and this and whatever. Okay, so let's look at this thing. We've seen this consolidation. We see that rising ish. It's like very slight 200-day moving average. We see the RSI on the bottom, right? So it just came off that really oversold condition. I want to leg into a position where I get some bearish exposure into their earnings, which are November 19th. We know that November expiration is November 21st. And so one of the things I'm thinking about is, like, we know that implied volatility is working higher into that print, right? And we know that, again, that's not something that's likely to abate over the next couple of weeks. But yesterday might have put investors, on notice a little bit, that as good as a story might be, that a lot of it might be in the stock. So let me just go to the options change. Well, first things first, I just want to isolate this. And Guy, maybe give me your take. If I was looking to isolate a support level over the next, let's say, week, okay, does this 195-ish level, which was a breakout on that big day, does that make some sense, like a check back to this level here, that 195-ish?
Makes a lot of sense. That's a move that you can see over the course of an hour or so with this stock. So, I mean, that is the first, in my opinion, the first level of support. I mean, that was the prior all-time high that we sold off from and then rallied through. So what was resistance becomes support.
Okay, so now let me go to the options chain. Okay, so I want to start with that November 21st expiration, because that's the one that I want to get long, right? I want to get long a put into that. And so, Obi, maybe you can help me think about this, right? So if I just said that 195, okay, I'm looking at that offered at 565 right there. You see that, right? And the delta, the 35%, it's basically saying there's about a 35% probability that option strike is going to be in the money on November 21st. If I was to look at the 95, or let's say this 190, which has a 27%, that's the delta right there. Mm-hmm. And given where I'm looking, we're at 202-ish, right? Is 195, if I was going to sell that strike, let's say next week, okay, if I'm going to sell the 14th strike and buy the 21st strike, okay, of the same one, what would you prefer? Let's just go to the November 14th. Would you prefer being at that 195 strike or that 190 strike? What do you think would make more sense to you? Just basically making sure, or giving yourself the highest probability that on next Friday's expiration, you're going to be above that strike.
Yeah, I mean, if what you're talking about is a calendar spread here, and the crux of a calendar spread is you're kind of throwing a dart. You want the stock to pin that strike, and essentially collect the premium on the short dated option you're selling. And then as the stock approaches that strike, your long dated option, the one you hold, that's going to increase in value. And then the kicker to that is you hope you get a little rise in implied volatility, so that backdated options gets juiced up. So, it really depends on your opinion on where the stock is going to go. And, looking at that daily chart, like you said, that 195 is a nice level to target. The other thing, if we switch over to my chart real quick, something I always have on my chart, Stan, is a more shorter term, like futures trader, kind of like 14, 30, 50-day moving averages if you're more of a short-term trader. And what you're talking about here is about a 2-week trade. And we're seeing that 14-day moving average line up with that 195. And prices almost even bounced off that already. Yeah. So it may come back to revisit that and test that. So to answer your question, I'd maybe want a little more cushion, because typically you could see a short-term moving average like the 14-day get tested and then reclaimed. So, 190 or 195, it's really comes down to your opinion on where the stock's going.
All right, that's a good point. So, Guy, to give ourselves a little room, I think that 190, which actually, if we go back to my chart for a second, that lines up at that big breakout day at the opening of that. Okay, so let's price this out, because this is a trade idea that's going to give us some optionality. So I'm going to November 21st expiration, right? And let's look at this. So that 190 put that we just described, that strike, is offered at $4.15. Now I'm going to go to next Friday expiration, right? The week before that expiry. And I'm going to look at that 190 put and cost, or I'm going to be selling that at 170, right? So if I'm buying the November 21st expiration 190 put for about 410 or whatever, and then I'm selling next week, Friday, 11/14, 190 put at 171, that costs me $2.43 on next Friday's close. I'd like the stock to be, I'd like to pin, as Obi just used that expression, at 190 or right below it. And then basically that premium goes away. So I shorted that premium, and it helped me finance that longer dated one that's going to catch earnings, right? So I like the risk reward. I like those strikes as you guys laid it out. I'm looking at this. The market is 240 at 246. I'm basically going to put in a 244 bid for this thing. And let's see if we get executed there. I didn't take the offer, right? But I put something in between.
Filled immediately. Boom.
I got filled there. Okay. So that's the trade. We're long the calendar. Nvidia, November 14th, November 21st, 190 put calendar. And I want that thing to be just a little above 190 on next Friday's close. It helped me finance the longer dated November 21st, 190 put. That's going to catch earnings. That's our trade. All right, Obi, walk us through some of the futures, because Guy and I, we got to learn how to trade the futures on the Legend here.
Yeah, so just like anything else on Legend, you sync your widgets together. As a futures trader, I learned how to trade futures from our mutual friend Guy, Mr. Mark Fisher, who is a legend in the space. I didn't get to meet him until a year ago, but essentially followed his sort of trading methodology over the years, and that's how I build my futures trading approach. Obviously, there's a ton of different ways that someone can approach the futures market as a trader. But from a layout perspective, so what you're seeing here, I would say, is kind of typical of what a futures trader might set up. We've got our snapshot widget with our underlying product. We can get our contract specs. So if you're new to futures trading, the sort of learning curve that you have to start with is getting to know your underlying futures contract. What's the size of the contract, the tick size, the tick value, the trading hours. It's one of those things you have to know like the back of your hand. We have all that information available to you. I have an intraday chart here. I have a 10-minute chart looking at right now the S&P 500. So, just like anything else, if you want to search a symbol, remember with futures, we have a /, which indicates the future symbol, and then you type in the symbol. So, for example, if we wanted to look at gold, we'd hit GC. If we want to go back to S&P's /ES. And then the current active month is going to populate on your platform. The other thing we have is the active trader ladder, which I would argue is the most efficient and effective way to do order entry and exit as a futures trader, especially if you're day trading, scalping, swing trading. Speed and efficiency is paramount. But yeah, we now have 5 groups of futures contracts on Robinhood: market indices, metals, currencies, crypto, and energy futures, with more to come and more functionality already in the works from the team.
It's amazing. And before we get out of here, futures trading, obviously I started in 1986. That's one of the aspects of commodities trading, was obviously trading the futures against the physical. And today's world, futures in some ways, Obi, are becoming an asset class of their own. And it's amazing that in 2025, the retail trader has access to this, but more importantly than access, has a way to understand it with the education that you provide. So I think as the years go forward, I think you're going to see more and more people gravitate towards futures, understanding that it's not just for the professional, the quote unquote professionals anymore.
Yeah. Well, Obi, I was going to say, talk about like a pro trading platform. When I started in the business about 10 years after, Guy, in 1997, the only folks who could trade futures were those who had direct lines into CME. That was it, right? So you had to be an institution. And then there was one, remember Globex, Guy? There was this one system that you could trade electronically overnight. Again, not accessible to retail traders, if you will. And so what's happened over the last, call it near 30 years, and having retail investors being able to have access to this on a platform like this is truly amazing, Obi.
Yeah, and check out the interview from Hood Summit, Dan, that you moderated with Steve Quirk from Robinhood and Terry Duffy from CME Group.
Yeah.
That was the theme of the whole conversation is Mr. Duffy and CME see the markets changing, how retail is such a more powerful force. And I'd have to check this, but I'm pretty sure I saw CME announcing that they had some of their biggest volumes ever in the metal complex recently with gold and silver just being super volatile. And, that's what attracts a futures trader is volatility. And I know, Guy, you speak about gold a lot, and we're going to talk about that on the week that was this week because I want to get your thoughts on it.
I look forward to that. That'll be Friday. We'll talk about it here again tomorrow, but I look forward to joining you on Friday afternoon for sure, Obi. So thanks for joining us.
Yeah. And we'll put in the links to the Robinhood YouTube page in the show notes, and you guys should go watch this. I had a lot of fun. I was on with Steph Guild and Obi on Friday afternoon. It was really good to look back right as we were kind of, dusting off from the week there. So Obi, thanks so much for being here, man. I learned a bit as far as navigating the legend here. I hope you're happy with the way Guy and I are navigating it from a trading perspective on the options front. But we really appreciate you being here. We'll see you next Wednesday on Market Call, and we'll see Guy with you on Friday afternoon.
Live in person next week. Can't wait to see you guys.
All right. Thanks, man. Bye.
Obi's the man.
Yeah. Guy, I think what you just said, starting in the markets, and we got lots of war stories, back in the day. But just think about how far some of these products have come. And even on the options front, I mean, I remember, when I was trading stocks back in the day, I mean, the idea that, you would trade options and they were accessible in a way where, the bid ask was so wide, right? Like no one really had a sense for, you didn't have access to tools that like we just described, measuring implied volatility and why that's important and everything like that. So again, it's like a different world here. Hopefully you and I are not particular Luddites as it corresponds to this sort of stuff. I think we're doing okay with the new technology.
We're trying. We're trying. Tomorrow, by the way, I think, if I'm not mistaken, we have Elizabeth Young Thomas. And today we're joining John Butters in a few minutes for his podcast.
Yeah, so that'll drop, I think, tomorrow on the FactSet feed there. So check that out. We really appreciate everyone being here. We'll see y'all tomorrow, 11 a.m.